Boom, we are alive, ladies and gentlemen. What a wonderful change of character in the market this last week or two. What I'm going to do is take you over some of the most valuable parts, why I think Bitcoin's going higher, and how many other tokens there are that are out there going to do this. So we're going to take a quick look at Chainlink, AAve, Fetch, and a few others, just to give a kind of just gross general sentiment. So if you've been following us for quite some time, you would know that we are big fans of what are known as the Wyckoff accumulation, distribution, and reaccumulation trading ranges. Here, as part of our private members group, what we look for are these long-term patterns that effectively show accumulation. Now, there's variations of these, what they look like, and how long they take to effectively move forward. A lot of things in life are what we call scale invariant, which means you can zoom in on the 1 minute and you'll see the same thing that you see on the daily time frame. Although the larger the time frame, the more reliable the data and reaccumulation ranges. So we're going to be taking a look at both accumulation and reaccumulation ranges today. Now, what I want to do is start by taking a look. Actually, let's go back to Bitcoin. So we had been following this accumulation range in Bitcoin for quite some time, approximately 300 days of accumulation. We had talked about what's known as an SOS and LPS phase. These are sign of strength and last points of supply. Sign of strength, last point of supply. Now, here, I believe our sign of strength is going to take us somewhere upwards of $40,000, and we just finished the final point of supply. One of the reasons why this is so valuable is in charting long-term accumulation ranges, similar to what we were just looking at here. Here we go. We'll use this one, accumulation schematic A. As soon as we break out into the top of the range, similar to what you see here, you have this final kind of testing pattern of the top of the trading range, which is effectively what this was for Bitcoin here, between $30,000 and $25,000. This was what's known as a reaccumulation range. Now, once you break out of that, you can usually assume that if you've been in an accumulation for 300 days, you're going to have usually at least 180 days of market upcycle. So we talked about this all the way back here when Bitcoin is around $20,000. I actually believe this market cycle is going to go a little bit longer than that, and we'll take a look at why next. So for Link is another example. So this is a beautiful accumulation range. Again, it's through the multiple months usually this takes place. For Link, we're sitting at 540 days of accumulation. And what's interesting here is this next part. So these are the reaccumulation ranges. Effectively, in between accumulation and distribution, you have multiple smaller reaccumulation ranges. So let's look at the 45-minute here. In the private group, one of the things that was really exciting, shared by Mr. Brock, I-77 as well, was the first reaccumulation range we had seen in Link and other assets for the first time within this 500-day period, okay? So every time back here, we would basically rush to the top of the trading range, come back down, up to the top, come back down, up to the top, come back down. And never once did we get a reaccumulation range. Everything broke down. The first time we got a reaccumulation range was September 30th to October 23rd. This little moment here, and we'll zoom in on it again at here, this area in green at the moment, was a very powerful change of character. And it was the first time we saw a move outside of the reaccumulation range. Now, in a stepping stone pattern, you get multiple reaccumulation ranges. So we're going to look at a few variations of this because it's very profitable to know how this works. Now, I've been very good at calling the bottom of the markets. I've been less good at calling the tops of the markets. I've gotten in really early every time and then been slow to leave. I won't make that mistake again. We'll go over that why in other videos, but for today, we're just going to focus on accumulation and reaccumulation. So here, we saw a second reaccumulation pattern for Chainlink take place. Now, this is a much shorter, reaccumulation patterns are much shorter, but they signal these large changes in the market. So here, with Link, 540 days of accumulation and the very first reaccumulations we've seen basically since 2020. So if you've been following the channel for the last bunch of years, or if you're new here, you'll know how extraordinarily powerful this particular moment is. It's not done. The bull market, or even if it's temporary here, usually extends for about half of the accumulation range. So we've got 500 days in Link, so I can assume maybe 200 days. And what's interesting is Link actually led the bull market for Bitcoin prior. It started its bull market cycle in early 2019, way before Bitcoin did. We saw a multiple month extension and then a big move up, a large reaccumulation range. Again, back here, you can take this, do the exact same thing. It was approximately 500 days too. So I think it's very similar to where we're at now. Yeah, 290 days in the accumulation range, and then another 600 from the breakout, approximately 250 days into the breakout. So from the top of that accumulation range, we saw almost a 10x. Now, I don't think we're going to see a 10x here, but I do believe we're going to visit much higher. Now, one of the things we like to do to figure out how much higher is go like this and draw our Fibonacci sequence. So one of the easiest ways to look at this target is know that this market gets overextended and gets overheated quite easily. So we could see an extension all the way up to the 4.236, which would be approximately $25 for Link. So what does that mean? Well, let's look at more data. So we've been following Fetch. It's one of the AI narratives we think will do really well. In the previous early part of the year, we had a 200-day accumulation cycle that led to a 700% return. Now, this is a really interesting accumulation after decline. So let's go back and look at it here. So one of our favorite, I guess, reaccumulation schematics is called reaccumulation after decline. And this is what it does. It shoots up in the market cycle, usually forms a small intermediate trading range, and then comes all the way back down into the box. Very similar to what we have here. Again, when you're hunting an animal, the footprint doesn't always look the same out in the wild, so it's impossible to get it exactly identical, but these are very close. So I suspect now what's going to happen is you're going to see a very large continuation pattern with Fetch here as well. So just from this trading range to the top, 4236, we'll draw that in. We usually get those extensions within the crypto market because it's so volatile. That puts us upwards of 60 cents. From where we are right now, that's approximately another 71%. So obviously being early to these is hyper important, but look what we see again when we zoom in to the 15-minute for Fetch. We see a reaccumulation range right outside of the box. This again means we're going to go higher. Now, these don't last forever. And again, they're usually some type of derivative of how long the accumulation cycle took place, because in that moment, market participants are trying their hardest to accumulate as much of these assets as possible before they go ballistic. So I suspect Fetch is going to go as high, at least as high as 60 cents here. If we go back to our chart over here, it could actually be quite a bit higher. You could make an argument that goes something like this, and you could see an extension all the way back up to $1. Now, do I think we're going to go into all-time highs? That's hard to say. We're at a point in history where the US dollar could become worthless. That at any flip of the coin, effectively, that could happen. We're not betting on it today, but in the very near future, Bitcoin could be at $6 million. Now, over time, generally, Bitcoin will become less volatile against the dollar because of the supply and demand issue. But if something goes wrong and all faith is lost in the dollar, then it's very likely you could see some massive readjustment of what prices are in terms of dollar value. This is known as hyperinflation. Or if your money becomes very unsafe, where the governments are confiscating it, or you can only use central bank digital currencies, this is another reason why the value of a kind of a censorship-resistant money could go so high. And one of the reasons why Bitcoin has remained our true North Star and guiding light for this decentralized process. But nonetheless, let's take a look at another one. Now, AAve is a little bit earlier on in this game, so I just wanted to show what it looks like in the earlier stages. So AAve has not broken outside of the top of its trading range, but if we look at these shorter time frames, what do we see? We start to see reaccumulation patterns taking place within the middle of the trading range, very similar to what we saw with Link here, right before we saw this massive 67% extension, right? So it's important to note, AAve hasn't broken out of the trading range yet, but at this very portion of the trading range right now, as we look closer, we see that there are reaccumulation ranges taking place. This is the first big change of character we've seen in the crypto space since 2020. So almost 3 years later, the first big change of character of accumulation and our very first reaccumulation steps are taking place right now. And one of the reasons why this is so exciting is let's take you back all the way to 2020, where I started to shout at at the rooftops that we were moving into a bull market. Now, one of the reasons why I was so confident, there's this old sentiment called buy when there's blood in the streets. If you've been in our private den, you will know that one of the things we've been charting are the excess mortalities that are taking place in the world right now. Those are hyper important. Now, I haven't changed this chart, interestingly enough, since 2020. All I'm going to do is extend my regression lines because I think they may become more valuable here again in the future. And we can go over regression lines in a different video. But effectively, one of the other interesting ways to look at this is that we're actually in a rising gradient bottom accumulation range. We've seen stuff like this before, so it's not impossible to think that it wouldn't happen again. But what that effectively means... Close the blinds here so don't get... Oh, the sun's right in my face, ladies and gentlemen. Jeez. Okay, here we go. Keep the sun out of my face. A little bit dark on the screen, but that's okay. These are really powerful patterns, and we've seen them before. You can go back and look at all of our previous videos. I don't want to go over too much now. The highlight of this point, though, is we could be in for a real quick move, way higher than the $40,000 that we have initially marked out. So for Bitcoin, our chart today, our first area of major resistance is upwards of around $39,000. Now, this is usually a banded area, and if you've been following along, you'll know that we haven't changed this chart at all. It's just been basically a profit-telling sequence of events, which is quite nice. So again, just to look at what this looked like in 2020, and one of the reasons why we were so bullish is we saw an accumulation range like this. And as soon as we saw the breakout of that accumulation range, it was all gung-ho market cycle for many, many more days. Let's see, at least to the top, 180 days, and from the full market extension, around 400 days of accumulation. So there is some time variance between each of these, but generally speaking, Link's a great example. If the market makers are willing to spend 500 days accumulating a price and they mark it up for the first time here, they're not done yet. They're just getting things started. So hopefully you've been accumulating this whole time, as we've been suggesting, not using leverage. It's a great way to lose money. Although some people I know do play with leverage and they're successful at it. If you've got enough capital to do so to cover the downside, it's usually not that big of a problem. I guess that's probably more of the helpful answer. But for most of you, it's better off to continue with what you're doing and just invest frequently and with whatever extra capital you have to put in the markets at that moment. I think we're just getting started. As a little tip of the hat here, A0 was one of the ones we've been watching in the private group here as well. And since some of our early entries are already up 60%. Now, I know a lot of you will go, hey, well, Tio, Bitcoin's up 110% since the bottom of the market. That's true. But if we want to take a look at where we were with Fetch at the bottom of the market, we're up 600 or 700%. There are still things that will outpace Bitcoin just because of liquidity and market cycles. But ultimately, I think Bitcoin is a really easy, rather safe investment nowadays. Everything else, you could lose all of your money on overnight because who the hell knows what it's going to do. And that's part of the fun. I like finding new ideas early, and it's been one of my favorite things to do for a long time now. So it's not just about the money. I do actually like this process. And even from the bottom of this cycle that we've been looking at in Fetch, for this trading range alone, we're already up 100%. So there's a significant amount more room to grow in some of these, and I suspect we're about to witness that now. Anyways, this is Tio with the Arcane Bear. Give us a thumbs up, leave your thoughts, your comments. I just want to do a quick market cycle update. Stay bullish for longer. This is not done. It's just getting started. All the people who just finally switched bullish after having to apologize to their audiences effectively, like Crypto Capo, they're just the first changeovers of disbelief. retail will start to enter this market. And the other thing I think that's important to recognize is that retail around the world can't buy Netflix, can't buy the S&P 500, but they can buy crypto and they can speculate around the world. For better or for worse, I think people deserve to learn and educate themselves instead of be regulated out of participating. So hope you guys enjoyed today's video, and we'll see you guys again on the next episode.